Yeah, well, listen, I mean, the stock has moved 30%. So, regardless of what you think, the market has priced in some level of optimism heading into this earnings report. And I think it's important to remember that this stock is still in a downtrend. So you have a stock that's rallied a lot into a downtrend. So guidance is going to be very key. And I think any weakness there, the stock could get sold. I think on a long-term basis, though, remember this. AMD is now 10 PE turns lower than a stock like NVIDIA. And of course, you can argue that there's different growth profiles there. But I think from a long-term perspective, this is an interesting place to enter a stock like AMD. More than anything, kind of the solid margin, free cash flow margin, profitability profile of a stock like AMD, that's what you want in this market. We're moving from kind of a rates and inflation scare that compress these multiples to more of an earnings and growth scare from an economic standpoint, which is why I think you want those characteristics in a stock. Maybe you have near-term volatility, but I think this is a reasonable entry point.
All right. It's a reasonable entry point. Next up, thank you, Starbucks. The stock down nearly 30% this year as interim CEO Howard Schultz tries once more to steer the company, this time through a wave of unionizations, staffing issues, and higher costs. Kate Rogers has the story on Starbucks. Kate.
Hey, John. Well, analysts are looking for EPS of 75 cents on revenues of $8.1 billion for Q3. Same-store sales expected to increase 4.4% overall and 9% here in the U.S. That's a big jump. Both here and abroad, inflation will be in focus. Last quarter, the company suspended its guidance due to rising COVID cases in China, so we'll be looking for an update on that market and its home market here in the U.S., and how consumers are faring will also be key. Along with any FX impact, as analysts say, China and Japan exposure could weigh on earnings. That's its second and third largest markets. Finally, any commentary on the ongoing union effort. For context, last quarter, about 50 stores at Starbucks had voted to organize, and this quarter, it's now more than 200. The union continues to push back at Schultz as he works to reshape the company for the future. As you said, the stock's been down year to date, but in the last 3 months, it's actually rallied up over 10%. So we'll see if it can hold on to those gains as well.
Okay. Jeff, is this story mostly about top-line growth now, or is it about costs?
I mean, I do think it's a little bit about both, quite honestly. And I'm in the economic slowdown camp. So being exposed to the consumer the way Starbucks is, that's what concerns me. And you might say, well, we've had a lot of earnings where companies are saying they're not seeing cracks in the consumer. But I think there's a little bit of a read-through there. Even Visa, for example, they're saying no consumer weakness. But they're looking at overall spending patterns. So I think what you're seeing is higher price, lower quantity. MasterCard, very similar. They're seeing this shift from goods spending all the way to groceries and gas, and you're seeing the savings rate come down. So this mix from discretionary to kind of staple spending, not necessarily good. P&G, the same. U.S. Steel, weakness was in the consumer space. So even though the cracks aren't totally visible yet, I would want to move out of the way of a company like Starbucks where you could see consumers trading down. And I know it's cheaper than it's been in the past, but I don't think it's a particular bargain here at 29 times forward earnings.
Okay. Kate, historically, is expensive coffee a luxury? Or is it the sort of thing that your mainstream consumer has to buy and therefore it's likely to get cut back on?
So, John, it's such a great question. We've heard from a lot of companies in the last week, Chipotle and McDonald's in particular, talking about lower income consumers starting to pull back a bit. So we'll be interested to hear if Starbucks says the same thing. But analysts have also kind of positioned Starbucks as a company that could do well in a recession because its core demographic is actually a higher income consumer that may bristle a little bit less if costs continue to go up. How much is that latte worth to you is kind of a personal question. We'll see what they have to say today. But so far, they've said that this could be a name that holds up, fairly well, like a Chipotle or even a Sweetgreen with a pretty loyal following, moving into potentially, a recessionary period.
It's a personal question, not like the touchiest kind of personal question. People might want to answer it, but we'll see the answer in the earnings results, I'm sure. Kate, thank you. Finally, PayPal shares are 70% off their 52-week high, but up 15% in the past week on reports that activist investor Elliott Management has a stake in the company. Kate Rooney has the story on PayPal. Kate.
Hey, John. Yeah, the Elliott thing is a big thing to focus on here. But number one, and the big thing I'm hearing from analysts, is that executive search. So PayPal's CFO, John Rainey, left for Walmart. Earlier this year, I was talking to Lisa Ellis of MoffettNathanson. She said it's pretty concerning that there hasn't been a resolution after Rainey stepped down back in January. There might also be a COO type to step in here as Schulman's heir apparent. But there's been a huge focus on just any updates on executive searches here because there is a void with the CFO position at this point. It's sort of an interim CFO. The Elliott investment you mentioned, PayPal hasn't acknowledged that publicly, so any comment on that around the call? There's also renewed speculation about a Pinterest combination based on Elliott also having a stake in Pinterest, so if they comment on that, but there's a lot of speculation that that deal might be back in play. And then finally, the business performance. So there's a thought out there that full-year guidance might still have to come down based on the international business for PayPal. We've seen things like currency headwinds, a slowdown in China, and then consumer spending has been hit. PayPal tends to skew a little bit more to discretionary spending. The comps from the pandemic years are pretty tough. So the bar has really been lowered for PayPal in previous quarters. The question, though, John, is the bar now low enough for PayPal? It really remains what investors I talk to call a show-me story. Some investors have lost trust in PayPal's own metrics based on how many times they have actually moved the goalpost in terms of their own metrics and targets.
Okay, Kate, good question. Jeff, what's your answer? Is the bar low enough? How exposed is PayPal to downward consumer e-commerce trends?
Yeah, so this is sort of a lukewarm answer, I guess, but this is one of these stocks that if you own it, I think it's okay to hold it here, but I don't think it's at risk of getting away from you, after the 30% or so rally that you've seen. I almost put a stock like this in context with one of its competitors, Square, right? And I mentioned free cash flow, profitability, quality. PayPal fits the mold there a lot more than a Square does, for example. So I prefer a PayPal at, say, a sub 20 times multiple with those characteristics versus something like Square that's more reliant on future growth. I do think Elliott's involvement is a long-term positive for the stock, whether it's cost management, whether it's growth in other areas. The company's already doing things to increase user engagement. So I think the long-term story is decent, but again, I don't think the stock gets away from you here if you're patient.
All right. Square going by block now, by the way, folks. It wants to be seen for all three dimensions of its personality. Kate, Jeff, thank you.